Welcome to the TaxSlayer Pro Income Tax Preparation course. We're continuing on with Module 12. This is Part 2 of Tax Credits. We're looking at the non-refundable credits, lines 48 through 55 on the new Schedule 3 of the Form 1040. First, let's look at the Retirement Savings Contribution Credit. Individuals or taxpayers who save for retirement may qualify for a federal tax credit. The Retirement Savings Contribution Credit, or otherwise known as the Saver's Credit, is a federal tax credit that's designed to encourage low and modest income individuals to save for retirement. Taxpayers who contributed to a retirement plan or an IRA may be eligible for the Non-Refundable Retirement Savings Contributions Credit. And remember, we discussed this in the last module. A non-refundable credit simply goes to offset taxes. The trigger for the Retirement Savings Contribution Credit, or the Saver's Credit, can sometimes be the taxpayer's Form W-2 for amounts that are listed in boxes 12 and 14. The percentage of contributions received as a tax credit is 10, 20, or 50%, depending on the taxpayer's adjusted gross income. The Saver's Credit can be taken for contributions to a traditional IRA, a Roth IRA, or a 401k plan. Now, to qualify for the Saver's Credit, the taxpayer must meet the income criteria, must contribute money to a retirement plan. We just saw that. The taxpayer is not a full-time student, and the taxpayer is age 18 or older, and the taxpayer is not claimed as a dependent on another tax return. For 2018, the income limits for the Saver's Credit depends on the taxpayer's filing status, 31.5 or less for single, married filing separately, and a qualifying widow or widower, 47,250 for head of household, and 63,000 on a joint return. The maximum credit a taxpayer can claim phases out as the income increases. The maximum credit, or the dollar amount of the Saver's Credit, is $1,000 for unmarried filers and $2,000 for married filers. Now, many eligible taxpayers, oddly enough, don't take advantage of this tax break because they simply don't know about it. A recent survey shows that only 12% of American workers with annual household incomes of less than $50,000 were even aware of the Saver's Credit. So how do you claim it? How do we claim the Saver's Credit on the tax return? To claim the credit, we use Form 8880, the credit for qualified retirement savings contributions. The credit then transfers from Form 8880 to line 51 of the new Schedule 3, and then finally to line 12 of the Form 1040. And next, one of the biggies for 2018, the Child Tax Credit. If the taxpayer has children who are under 17 at the end of the tax year and who have valid Social Security numbers, then the taxpayer can claim the Child Tax Credit for 2018 and get a $2,000 tax credit per child. This is doubled from 2017. Now remember, the child must be under the age 17 for the entire year. The Child Tax Credit, which was created by the Bush tax cuts, was set to expire at the end of 2012. However, if you remember your history, the fiscal cliff deal that was signed on January the 3rd, 2013, extended the current child tax credit for the next 5 years. So what's new for 2018? To claim the child tax credit, or the CTC, or the additional child tax credit, the ACTC, qualifying child must have a Social Security number. And again, the maximum amount of the child tax credit has increased to $2,000 per qualifying child. When figuring the child tax credit, threshold amount for the limitation based on AGI has jumped to $400,000 in the case of a joint return and $200,000 for all other returns. And again, I'll emphasize that first paragraph. New for 2018, the qualifying child must have a Social Security number. Maximum amount of the additional child tax credit has increased to $1,400 per qualifying child. This is a refundable credit. The earned income threshold for claiming the additional child tax credit has decreased from $3,000 to $2,500. Looking at some of the qualifications, qualifying child for the child tax credit is someone who meets 6 tests. The age test. To qualify, again, child must have been under age 17 or age 16 or younger at the end of the year. Second, the relationship test. To claim a child for purposes of the child tax credit, he or she must be a son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, or a descendant of any of these individuals. This can include a grandchild, niece, or nephew. An adopted child is always treated as the taxpayer's own child. An adopted child includes a child lawfully placed with the taxpayer for legal adoption. Third, the support test. In order to claim a child for this credit, the child tax credit, the child must not have provided more than half of his or her own support. Fourth, the dependent test. The taxpayer must claim the child as a dependent on the tax return to receive the child tax credit. Fifth, the citizenship test. To meet this test, the child must be a U.S. citizen, national, or U.S. resident alien. And finally, the residence test. The child must have lived with the taxpayer for more than half of 2018. There are some limitations to the child tax credit. The credit is limited if the modified adjusted gross income is above a certain amount. And again, just to emphasize a couple of points here, the amount at which this phase-out begins varies depending on taxpayers' filing status. For married taxpayers filing a joint return, phase-out begins at $400,000. For all other filing statuses, the phase-out begins at $200,000. In addition, the child tax credit is limited by the amount of income tax that the taxpayer owes, as well as any alternative minimum tax owed. The additional child tax credit kicks in if the amount of the child tax credit is greater than the amount of income tax owed. In this case, the taxpayer may be able to claim a refundable additional child tax credit. Something else new for 2018, if you have a dependent, you may be able to claim the credit for other dependents, or the ODC, other dependent credit. The ODC is a non-refundable credit of up to $500 for each eligible dependent who can't be claimed for the child tax credit. The ODC and the CTC are both calculated using the child tax credit and credit for other dependents worksheet and reported on Form 1040, line 12A. Next, residential energy credits. What's new for 2018? The non-business energy property credit expired on December 31st, 2017. This was the credit that covered insulation, roofs, and windows. You may be able to take a credit if you made energy-saving improvements to your home located in the United States in 2018. The energy credits are non-refundable. It's a dollar-for-dollar drawdown on taxes owed. The residential energy efficient property credit was renewed through 2021. This credit applies to geothermal heat pumps, small wind turbines, solar energy systems, and fuel cells. So what home energy sources qualify for the residential energy efficient property credit? Again, just to emphasize, geothermal heat pumps, solar water heaters, solar panels, small wind turbines up to $4,000, and fuel cells up to $500 for each half kilowatt power capacity. The residential energy credits are calculated on the Form 5695 as they have been in the past, and this flows to Schedule 3 on the Form 1040, line 53. There are some other credits covered by Form 3800 or the General Business Credit. Again, there are a number of separate credits that are specifically included by law in what's called the General Business Credit. In other words, the General Business Credit can be just one or more than one of the many available credits. Each separate credit is computed on its form for that particular credit. Some examples: the 3468 investment credit, the 5884, the work opportunity credit, the 8936, the qualified plug-in electric drive motor vehicle credit. These all refer back to the Form 3800. If you qualify for more than one of the credits that make up the General Business Credit, then you must file the 3800. If you claim only one credit, the 3800 may not be required. The one credit is considered your General Business Credit. As with the other non-refundable credits, this credit is subject to a limitation based on the tax liability on the 1040, and this is taken into account on the particular form used to compute the credit. This taxpayer qualified for a $3,600 General Business Credit, but because of the tax liability on the 1040, that credit is limited to $2,142. It simply goes to offset the taxes on the return. Here you'll see why the 3800 is sort of an all-encompassing form. Here's some examples of some of the credits associated with the 3800. Distilled spirits, Form 8906. Qualified plug-in electric drive motor vehicle credit, we referred to that one earlier. The orphan drug credit, Form 8820. Carbon oxide sequestration, Form 8933. Mine rescue team training, Form 8923. As you can see, this Form 3800 could be a lobbyist's dream. Now let's take a look at an example of one that you may see during tax season. Form 8941, the credit for small employer health insurance premiums. This credit was brought about by the Affordable Care Act. Form 8941 again flows to the 3800, and the 3800 flows to line 54 on the 1040. David Saverson owns a small business and he pays $6,000 in insurance premiums for his 2 employees. Under the Affordable Care Act, he's entitled to a tax credit. Again, it's calculated on Form 8941, flows to Form 3800, and the Form 3800 flows to Schedule 3 of the Form 1040, line 54. So in summary, there are a few more non-refundable credits on the Form 1040. These include the Retirement Savings Contribution Credit, sometimes called the Saver's Credit. This is a federal tax credit designed to encourage low and modest income individuals to save for retirement, claimed on Form 8880. There's the Child Tax Credit, which is doubled for 2018 tax year. For children under age 17 at the end of the tax year, taxpayer can claim a $2,000 tax credit per child with qualifications. The residential energy credits slimmed down somewhat over the years, but taxpayers who make use of renewable energy may be eligible for tax credits to offset some of the costs. We claim the credits by filing the 5695 with the tax return. And the Form 3800 covers an entire series of general business credits. The general business credit is made up of a number of separate credits specifically included by law and can be just one or more than one of the many available credits. Each separate credit is computed on a form for that particular credit. And now, let's look at some review questions.